YouTube, what's going on? My name is Gabe Bowling and thank you guys for jumping in today's video. We're going to walk you step by step on how to find deals and how to determine ultimately, is this a good deal or is it a bad deal? Before we jump in, if you don't know who I am, I recently just turned 25 years old and I own over $10 million of apartments, and I personally raised over $100 million working for one of the most well-known real estate entrepreneurs. I broke off working for them in February of this year. I closed on my first $10 million deal in June. I've helped my consulting clients close on over $30 million of transactions. The reason I say this isn't to brag, it's just simply to show you that I am doing this every single day with my own money, with investors' money, and my clients' money as well. So with that being said, let's go ahead and let's jump in. All right, so jumping into a random deal that I just came across and I just found. It's 60 units in Huntsville, Alabama. All I did to find this deal, guys, was I went to Crexy.com. It is a public listing service website that brokers utilize to list their properties to get it seen by more people. I went to Crexy. I wanted to look at deals in the Southeast and multifamily. This property came out 3 hours ago. So this is fresh, off the cut. This is not an example. This is a live deal that could be a good deal. So let's go ahead and let's find out. So full disclaimer, I built out this tool. Now anybody can actually do the back of the napkin underwriting if you know what you're doing. If you're new to it, I sell this tool for $7 and I give away a completely free real estate course. Now, before we jump into the underwriting, I just want to mention that I have a completely free multifamily real estate course. And instead of telling you about it, I just wanted to show you exactly what you get. Yes, it's completely free, no strings attached, no credit cards required. Click the link in the description, you put in your email, and you get immediate access to a login where you can spend 2 hours going over the basics of multifamily underwriting. And so now moving into the underwriting tool, I call this the back of the napkin underwriting tool. The only purpose for this is to be able to help you filter through as many deals as you can in the quickest amount of time possible. A lot of people end up spending way too much time in Excel spreadsheets, wasting time on deals that they ultimately don't know. Do you want to spend more time on it? And so that's the intention of this tool. If you want it, it's $7. I put the link in the description. You get access to it and you can do exactly what we're doing here. So all I need for the first tab is I need the number of units and I need the purchase price at which they're trying to sell it for. Now, this doesn't mean we're going to buy it for this price. I just want to make sense of the deal at their price. And as you can see, it's 60 units and it's being sold for $5.1 million. So all I'm going to do is I'm going to simply put 60 units and I'm simply putting $5.1 million, and then I'm going to go over to the financials tab. And as you can see, the only information that you need here is the average effective rent, which you can find in the marketing material. You can find the occupancy, and then you can also find the expense ratio. And then one of the biggest components that I'm always looking for is what is the upside? Traditionally in value add multifamily, the broker is always going to be trying to sell you on the upside. Now, just going through the packet, I found that the average rent was $700. It's 100% occupied, and they're operating at about 20 to 25% a year. And then the projected upside, or the market rents, is $150 over what the current in-place rents are. And so if you really wanted to understand how it works, you can actually look at the formulas and see, okay, what information am I pulling? What formula is it? And lastly, I need to come up with some debt assumptions. And this is why it's important to be active in the market and understanding what is going on in the debt industry. Today is September 30th, 2022. We've had a crazy year for interest rates. 6 months ago, they were 3%. Today, they're 6%. And so depending on when you're watching this video, it could be crazy to see what I'm about to put here, but let's just go with it because this is what's happening today. Now, the loan to value that I can get on a property like this is going to be about 65%, meaning of the $5.1 million purchase price, we're going to get a loan for $3.3 million, and we're going to raise or put down about $1.8 million of cash. Now we're going to borrow the $3.3 million for about 6 to 6.25% today. And that is all you have to do to come to a very high level return. That way you can determine, do you want to spend more time on it or not? And so as you can see, assuming that we have an 80-20 split with the investors and we hold this property for 5 years, my average cash flow is above 12%. My average annualized return is above 25% per year. And then our equity multiple, meaning investors who invest 100 grand, they should get back close to $236,000 between the cash flow and the appreciation over a 5-year period. All I'm going to do is I'm going to look at the deal. I'm going to determine, do I want to spend more time on this deal based on the returns here? Now, before I even look at this deal, and I didn't go over it in this video, but it's in the free course, I have to check the box on that deal first before I even look at the numbers. And this is why I have no problem going over this deal live. It came out 3 hours ago. I'm not going to touch this deal. It was built in the 1960s. It's too small for me. It's a C-class property. This just isn't what I do right now. And so anybody watching this video, I mean, have free reign at it. I wanted to show you a live deal that's out there actually today that you can find that would make sense from a return perspective if all of the information that the broker has provided is accurate. So your job as a real estate investor is to go through, comb through this deal, determine, do you want to spend time on it? And then if you do, if 25% a year sounds good to you, now your job is to actually reach out to the broker and start verifying all of the information and then moving into a much more detailed underwriting model so you can make a confident decision whether or not you're going to buy this property or not. And so just to recap again, 2 things. The free course, this is what it looks like. It's in the description. All you have to do is put your email in, nothing else, and you get immediate access. Secondly, if you want access to the Deal Analyzer tool, it's $7. Click the link in the description, grab your copy, and then start using this, whether it's 2 units, whether it's 20 units, whether it's 100. This tool works on any size deal anywhere in the country. You just have to get these small pieces of information, and it's going to be able to help you save hours of time. Now that I showed you step by step what you could be doing today to look at more deals quicker, faster, more efficiently, and determine whether you want to spend more time on them or not, I just wanted to recap step by step so you have a playbook to go out to the marketplace and start finding deals. Step number 1, for sure, download the free course. It's 2 hours, completely free content. It's a no-brainer. You spend 2 hours inside my brain for free. All it takes is 60 seconds of your commitment and then the time to watch the videos. Secondly, you want to find deals. So pick the market that you want to be in, call the brokers, have a relationship with brokers, and start looking at deals, whether it's going online to Crexy or whether it's just getting the deals directly from brokers. You have to be looking at deals every single day. Then once you find the deal, you want to look at it from a very high level, call it back of the napkin standpoint. What does this deal look like? Are the deals that you're looking at, do you want to buy the deal? So you check the box on the deal first based on the criteria that you have. You'll learn that in the course. Once you find the deal that checks your box, then you go into the back of the napkin underwriting where you're looking at it from a high level, assuming that all of the information that the broker has given you is accurate, and you look at the high level return. Okay, is that return? Check the box. Do you want to look at it further? Is it priced too high or is something wrong with it where you don't want to spend any more time on it and you want to go ahead and move on to the next one? And so that's it for today's video. If you guys found any value in this video, all I ask is that you guys like, comment, and most importantly, subscribe. My goal is to bring content to you guys every day. The only way that I continue to grow and continue to produce more content on YouTube is by the help of you guys subscribing and sharing the message. And so with that being said, that's it for today. I'll see you guys next time. Peace, love, and cash flow.